And trader, the breakout now confirms that this is an important place, that they needed pressure to break out from it. Is it not? So it makes this line important. The same thing happens here too. Even though we have not yet used this as a resistance, because there was 2 bounce and a strong break, it makes that line important. So traders put it on their chart and wait to see how candles close below and above this line in the future. Do you understand that part now? Traders wait to see how the market will react when it gets to this line. And as you already know, if the market breaks these levels, if it breaks, that is, if it gets a close below or above these levels, it means then that there is, look at what we are saying. When this market got to this line, it was black up to the point where it stopped being black, and then it now moved up. It refused to close below. If this daily, traders will trade this as a rejection of that level. They will tell you that the level is rejected. I've given you 3 rules. I told you rule number 1 is at least 2 bounce and a strong break. At least 2 bounce and a strong break. Rule number 2, I said that there could be multiple weak rejection. All right, that's why you can find resistance in the middle of things like this. You can see inside here, I'm seeing 2 bounces, I'm seeing strong breakouts inside here. And then what happens going forward? It serves as a resistance. You can see it, right? Can you see it? So what you're looking for is a strong break. You're seeing rejections. Apart from that, I mean, let me get more information. And then anywhere price repeatedly reverses from is also an important area. Should not be neglected. Like the top here, you can see multiple weak rejection, is it not? You see the weeks rejected, market comes back down, market goes. So this area is a major resistance. It's a major resistance. As a matter of fact, you see how the market came down from that place. They did not allow the price to beat it. The times when the market tried to close above, you can see they sent it back down. If it goes up, they will send it back down. It doesn't quite make it. The next day, it closed below. It goes up, they send it back. It goes up until traders now see that it's a strong resistance and it's not breaking. Is it not? Mm-hmm. So these are the things that make up a valid or a strong resistance point. And then you can see what happens going forward. Immediately is violated, then there's trouble. But then we still see some sort of rejection until eventually a strong break.
There's a false breakout there.
Yeah, this is actually a false breakout because it did not get any follow through. So there's no continuation. So when a breakout is real, it breaks and then it continues to go. Right? It breaks and continues to go. So this is the type I was talking about right here. You can see that they are very important. When the market bounces and then breaks out, when the market bounces once, breaks out, market bounce, breaks out, retest, this has bounce here, breakout, and bounce. It makes this place important. You can see traders using it to buy. Is it not?
So please, can you widen the
Yeah, sure.
so that we can see the
Let me.
bounce and
This is 2013. All right, look at what I'm saying. So this is where I drew the line. And I drew the line because right here, you can see, and then this again is, who can see a demand zone there? Who can see a demand zone here? Can see that thing I was talking about, confluence, right? So this place, market has reversed from here before. It goes, and at that area there is some, there are some activities there. Is it not? There's a base, and then this acts as a zone, and it also acts as a confluence.
What do you mean by confluence?
Confluence is where two or more things are happening.
Like what is happening?
Confluence is where two technical analyses meet. It increases the probability of eyes looking at that level. All right, so that this bar right here is your base that acts as the zone here. All right, and then you can see what traders would do is they will place an order, limit order here, and then see what I was saying. You cannot trade sometimes, not all the time. It's easier for you to go to the lower time frame right here to look for a structure or look for something that will now tell you how to enter. We have not started talking about entering yet, just about recognizing these things very well. Okay, this is 2013. So H4 we can go to H1. Are you sure I'm going in the right direction? Did I not put this thing? Should I? Oh, I don't have that on this time frame. That's unfortunate. So I wanted to show you something that looks like a structure break, but the number of bars that I can view at a time is exceeded. All right, but I want to believe that you understand what we are doing for now first. Abi, is there any question based on what we have done? Is there any question?
Can we recognize minor resistance?
Yeah, minor resistance are everywhere. They are everywhere. Once the market goes up and turns back, and then, in fact, we say every swing high.
Okay.
This is a minor resistance, right? Minor resistance. Market comes back, right? This is a minor resistance, comes, right? They are minor resistance. Once you have about 2-3 bounce, it's no longer a minor resistance. It now becomes important. All right, and then that's why we have this line here. Okay, and then we see what happens in the future. Okay. And then you have to also know that it's not all the time that the market actually pays attention to support and resistance lines that are drawn. But most times, if the level is good, it will pay attention to it. And then if you ask me, the one I prefer is the very first one where you have 2 bounds. That's this very one. It's usually very effective because it has everything, the ability of eyes looking at that level, or the probability of the thing happening. So if my fib level aligns with maybe support and resistance, it means I have a confluence of fib pullback and support and resistance. Okay, so those are the types, right? Those are the types. Alright, so that this bar right here, because it has everything that most traders want to see. As a matter of fact, there is a market structure that people trade as a strategy that says that if the market goes like this, right, consolidates, breakout, you wait for a retest and buy. This is a trading setup. Alright, and it's based on support and resistance. Okay, and then it is everywhere on the chart. You can see the market bounces 1, 2, 3 and breaks out.
Since it says you'll be permanent.
No, we want you to double click on it to go off. When you double click on it, this thing will show that highlight. Then on the higher time frame, especially on the daily time frame, right? Especially on the daily time frame. Observe them on the higher time frame for a close. For a close. Because a close above or below, a daily close above or below a major trend reversal is suggestive of the exposure of the next level. Right? So if you close above a line, we expect you to head to the next one. So what we do is, when we open our chart now, we have to place lines. These lines will act like prices. Like, you know, it's like numbering them according to how you want. Maybe 100 naira, 200 naira, 250, 280, 320. You have all this support and resistance permanent on your chart. Then as the bars are forming and moving, right? If there is a line, of course there's a line here, and the bars gets here, does a wick, and closes like this. You know that this price has been rejected, is it not? So what you are expecting now is what price? 250. That's how it's traded. It's as simple as that. If you do anything more than this, you're not doing TA. All you just need to do is make sure that your line is correct. And then I introduce you to some of these other guys that use these lines. You can see the lines that they are using. You can look at their charts and see where lines are permanently. Some of them put these lines on round numbers. Right? They put it on round numbers. If they see that the market is approaching maybe 1, 2, 2, 2, they can just say, okay, at 1, 2, 500. Is it not? Or maybe 1, 4, 4 something. Something close enough because this looks very far. So they use a round number. You can use 1, 2. As is the case with EU. Right? You can use 1, 2. Gets to 1, 2 is rejected. We observe it to see whether it gets broken or not. Okay? So that's the way we interpret these lines. That's why I said that once you follow these rules, place them on your chart permanently, and then read them. That's how professionals observe TA. Read it, go to your daily close and observe. Is there a daily close below or above the line? If this thing happened and then it closed below, the next level is 100. Do you understand? If you look at every market, you see all those things happening. If I want to label this market now, I'll put a line here. Is it not? Is this not a line? Who would design this R1, R2, R3 based on Fibonacci ratios? They just put these pivots there permanently based on Fibonacci. But the right thing is pivots are formed from clusters. Anywhere the market flattens for it. Yes. So what do traders look for when they want to trade? They want to see a continuation pattern on the candle that breaks out of this line. If I see the market, going up with strong bars, and then there's a continuation pattern, you know what it means? If this is a valid support and resistance line, and I have a continuation pattern here, I know that DO is about to happen, is it not? I don't know if it makes sense to you. It's DO because the market cannot crawl and pass it. Abi? It will go with steam. So all you just need to do see is a daily close. There is a continuation bar on those lines. Or a daily rejection. Daily close or daily rejection. that's how to use support and resistance. You're looking for a daily close or rejection. Alright, daily close or rejection exposes the next support or resistance level. Simple. That's all you need to know about support and resistance. Yes. If it's rejected, it will expose back the one up. If it closes, it will expose the one that it closed towards. That one, that next one, all these things are called magnetic lines. The next, when it closes above it, there will be a pull. It's called magnetic lines. These psychological levels are magnets. It will pull it. It will pull it to the line. Immediately it pulls the price. Once this rejection happens, and there are others that are sitting there that are preventing the price from going forward, or there are no more orders to drag the price up, so there's no point going with it anymore.
Sir, if you have the close of the day, that means you're talking about daily time frame on daily time
Yes, it's not necessarily on daily time frame, but
it works for other time frame.
it will work for other time frame depending on the sister chart you are using. So, but what I know is that many traders do daily analysis for support and resistance. If you see a website that supplies you support and resistance, it's daily. If you see any major indicator that did not tell you that this is the time frame, it is daily. Except the indicator works depending on the time frame on your chart. Okay, because there are indicators that will plot them automatically for you. But all those things are very messy. Once you understand these things I've given you, those rules, you can have these lines. Then you keep them, and then you see how, when we get to multiple time frame analysis, we start to read them. Okay, we start from the weekly, we look at how the market is rejecting a level or breaking out of a level. Then when that happens, we go to the lower time frame, resistance and support level, and then trade. If you are trading with the trend, just need minor support and resistance. Let me show you the pathway. Pathway for support and resistance. And this is going to lead to some basic market structure that you should bear in mind or start to recognize as people who are just starting out on technical analysis. You should be able to open your chart and look at these lines or these structures, and then and recognize them. Look at how the market will go. How if we're looking at the principle of TA, market will usually go like this, come back, go like this. We call this now support, Abi. We will break it. There will be a minor pullback, right? Then it goes. Then you can now have something like this. That's the way it works,
Distribution.
right? And we'll come back. Make this one now. And then it goes like this. So see what happened here. We draw out lines. This is the first place, Abi?
Yes.
That's the first place. We put it permanently on our chart. That's the first place. Yes. So you can see that here we have R, and then R turns to S. Abi? Here is here at this time it was minor, Abi? At this time it was minor. So we call this whatever. But this is the second one we can draw here as minor. Then we go up. This one becomes major, is it not? 3. Number 3. Alright. Then there is another one here. Abi?
Yes.
From what we know now. This is 4. Can you see it now?
It's major.
So the market bounce, breaks, bounce. Then it has made this previous one now a support. Abi? So here was resistance, now it is support, and then you have a strong break. So you can see how it came here, got to a retest at this previous support, made it resistance. Okay, so here we have support, turning to resistance, and then there's a breakout, and then this original one acted as a minor support, all right, and then before the market went and then breaks. So you can see the pathway, principles of support and resistance. It says that every prior high is a potential support or resistance. Every prior high is a potential support or resistance. It also says that support can turn to resistance, can turn to support, and then of course on the way up, right? And then on the way down, the opposite can be the case. So just take note of that. And I explained it yesterday, telling you that it's like having to bounce a ball across a hollow space. Alright, if the ball finds the hole, it will go down, Abi? And then the other level will now become the new support. So that's exactly what's happening. That's the pathway. Traders can profit from simple support and resistance structure. But again, don't forget the CNS. CNS is very important. CNS is very important. If you know CNS, you can use simple support and resistance and then make money. Very simple support and resistance. Without too much, without indicator, without anything. There are two things. You have to be sure whether this trend is strong, whether it's weak, whether it's healthy. Once you know that information, you now know what to look out for. Another thing I'm going to teach you now is patterns. If the trend is very strong, you just need patterns. You can add the 20 EMA so that you will see how the patterns settle on the 20 EMA. You need patterns. Anytime the market is approaching the 20 EMA, look at it, you will see a pattern on it. The market is going up strongly, right? A pattern will form. It's a continuation flag. And then you can trade a breakout of this pattern. These are the things you have to go and start looking out for now. So I'm going to teach you some of these patterns, their names, and how to trade them. Before I go into details with that one,
it's a pathway for support and resistance.
Pathway.
Yeah,
That's what I do. Simple pathway.
Okay.
Yes. This is right. Resistance.
Isn't in us we go find theory?
And not necessarily now, but because in YCOP we're not the discussion was not about levels. It was just about the way markets.
In shape, not.
Okay, the shape. Yes, of course. That's how most markets move. That's how
In here, the accumulation is right.
No. I'm just showing you a random thing. It's
I'm
not.
comparing it with that. Here, the rate of accumulation is quite wide.
Oh, okay. Of course. In fact, there is no accumulation here. If you like, we're just saying.
So this is just the pathway for support and resistance.
Yes, I'm just and then I identify how many support and resistance here. 4, Abi. So see what I'm going to do now, quickly before I go on, so that we don't learn too many things and then you don't actually know how to use this. Now, what we'll do is you are going to now I will open a chart and put all the support and resistance there. Then I'll change the market, and then you will place your own. So we'll see how many you can place. Out, come down, indecision candle, trend bar, and then you buy. It's a setup, right? But if you wait for setups like that, you might not take any trade. Is it not? You might not take any trade because how many times will the market print correctly all these things and then come back and print the same thing correctly? The only thing we are saying is let's draw these lines and know what level the market is going to. That's all for now. That's all for now. For now. And then this is going to help you in designing your consensus, is it not? It's going to help you. Because if you know that this market now when we were here. For now, you should be able to draw these lines. Well, let's start from the back. Yeah, pass it to
Why you mention my name?
good.
Sounds good.
Exactly.
Oh yeah, change. Call another market. Call Euro USD.
I'm talking about
You're talking about what?
the times are too stressful.
You can increase it, but then we need many bars actually. You can come forward if it will help you, or you change the market first of all. No, do Euro USD so that we'll go gradually. Click drag and drop. Drag. No, you're not. Hold it. Click it down. Then drag it. Drop. Okay. Oh yeah. If you're not seeing, you can change the zoom it in. But you have to keep. It's the way you open a chart and start putting trend line. Now you open it and take horizontal lines and keep them. So you're not using the best indicator you can get is pivots. Pivot to draw 3 lines below and above the current price. But I don't think pivot comes with MT4 by default. Abi? There's no pivot on your MT4. Is there pivot? I doubt.
No.
There's no pivot. I don't think there's pivot. Only what? There's no pivot. There's no pivot. But if you pivot, I told you about pivots, that pivots happen where there is cluster of prices. Anywhere there is cluster of prices, the up and the down will serve as a pivot. When 1, 2, 3 and breaks out, traders wait for a pullback to that resistance, and then they sell. Is it not? Can you see it? Do you see it at all? First one, second one, third one. Strong break. Right? And then pull back. And then they sell. That's it right there. Support and resistance. Okay.
What are you seeing?
What?
What are you seeing?
What you are seeing?
What are you
Look, okay, you cannot. This is one rejection.
Yeah.
This is another one.
Several rejections.
Yes, several rejection. Right, and then strong breakout.
And is that not a major?
That's what I'm saying. Is major.
Okay, I thought you said it's minor.
No. This is major. This is minor. Swing. Every swing is a minor resistance. Every swing. And then that is why some traders, I don't like the habit of buying at a swing. There's nothing wrong with buying at a swing if maybe it's minor. But if it's a swing on the trend, it's not a good idea to buy there. It's too high. Right? Even though you can see this one is still going up. But if you want to buy somewhere that is safe. Yes. Not at the high of the trend. You don't come and then buy, a breakout here. It's wrong. I'll teach you when to buy breakouts. We're going to do patterns, and then I'll teach you where to buy breakouts, when to buy them. So another example of support and resistance. You know that these things are not usually as they are. This support and resistance here. There's a false breakout to the base, right? Market bounce, breaks out, does a retest, pretends as if it's going to go down, and then it goes all the way up. Same thing. Same thing. It happens over and over. This right here is a major reversal. When the market bounces from a level like this, breaks out strongly, then comes back and bounce. Yeah, comes back and bounce on that place. If you like, you have 2 points. You have 1, 2, is it not?
Yeah.
1, 2, pull back, and then breakout, and then retest. So going forward, if the market gets to that place again, it will usually react. And then here you can see what you have is a strong break. Usually because traders have this zone somehow as a resistance, so it will require a strong break or a reversal.
So I have a question.
Yes, go ahead.
The second touch or the second pass, how far apart must it be from the first one?
No, we are not, there's no measurement for how far apart they should be. The thing is, market attempts, the more market tries to go to it and reverse, the more it tries to go to it and reverse, the more traders are counting as attempts. It's just like asking the question for, what's it called? For L1 and L2, and L3 and L4. You are making attempts to hit this thing and you are failing. You're making attempts. So we keep counting these attempts for you.
The better the confirmation.
Yes. So you're making attempts, you're failing, you're making attempts, you're failing. So there's no how far apart it should be, because when we start doing all those things now, you will now start designing something that is only you that is seeing.
Then the question.
Yeah.
We say support and resistance is a level where price will react.
Yeah.
It has reacted there in the past. It
Yeah.
will react there in the future.
Yeah.
So that makes it that if I confirm a support level now, in the future it will become another support level, right?
Yes. You can see all these prices. What you will see is when you have opened a chart and placed permanently your support and resistance lines, they will stay permanently on your chart.
Okay. So it will always be.
Yes, you remove the highlight so that it doesn't move as you are scrolling or using your chart.
It's permanent.
It's permanent. And then you are looking at it and expecting price to react from it in the future. That's the way they are.
The trend line doesn't seem to be permanent.
No, trend line is very temporary actually. Trend line is for the current. Trend line is like a minor resistance line that just serves temporarily as the support, to just, keep the thing going. Yeah.
Does it mean when you draw the support and resistance line and you want to change it as in delete it?
A highlight will show you right click and delete. So if you're not comfortable with it or you want to remove it from your chart, you can remove it. Or you right click and go to object list. Go to object list here. Can delete all these lines I've been putting here since.
Because there's one I drew last night.
Okay.
So we can say major resistance or support then is permanent.
Yeah, major resistance and supports are supposed to be permanent on your chart. You're supposed to observe them on the higher time frame. Is this not a line? Multiple week rejection, strong break. Is it not? Yes. It's a line. Yes. Market comes to it unable to close below. What do you expect? Higher price. Going up, there's another line there. Is it not? This red one now. Strong break, and then you wait. Is there a close below or above? You want to see what happens, and then eventually you make decision based on whatever happens. As long as it close, if this market succeeds in closing below, we're expecting that, as it's looking here, we're expecting lower prices. Is it not? We're expecting lower prices. Then, of course, this happens to be a faker. I'm going to teach you about fake breakouts. All right, that's when we now start looking at pressure and other things. So, but I'm not getting there now. So, but when the market doesn't break out successfully, because sometimes you have multiple. I don't have this line drawn correctly. So, but there is a chance that between this line and this line, there are other resistance zone around here. Is it not? Yes. So and this is H4 also. So there are many things that traders look at actually. Okay, many things. And then you reject, you see, you refuse to break above this line, it starts to come down. This is where it's coming to the other line at the base. It breaks it, it's going to the other one up there. You can see. That's the way it moves. You break it, you have to come all the way down to this line. Of course, there are other lines from what I can see in between. Here, there are other lines. So you break that line, you retest it, you did not go above. That means you have to come down to the one at the floor. Are you seeing it now? That's the way support and resistance works.
So this support and resistance on the chart now, do you go to the indicator list to bring, just like we did big rainbow, just went to parabolic, or you just bring out a new chart and start
drawing it, yes.
Is it what you do?
Yes. When the market was, let's say, as the market is here now, you will see 3 lines under and 3 lines above. Those 3 lines above will serve as this thing I'm telling you with support and resistance. It's assumed that if the market closes above the pivot, what they call it, this one will be S1, the one under will be S2, the third one will be S3. That's pivot. Then on the resistance side, you have R1, R2, and R3. Do you understand? So that if the price breaks above R1, it's heading to R2. If it breaks above R2, it's heading to R3. If it exceeds R3, a fresh pivot will come up. That will show you S1, S2, S3, and R1, R2, R3. Some people will design this market flattens out like this. There will be a pivot there. Anywhere the market is clustered, there will be a pivot. Areas like this, there will be a pivot. Areas like this, you see a pivot here. That's the way they do it.
Isn't the weak or the good?
Whether weak or body, just know that it is this cluster here. It's a cluster.
The pivot help means to identify the next
level, yes. It will help you to identify the next level. But what I'm saying is, some people use pivots, but I'm not a fan of indicator because I believe these lines have a higher probability of working out than pivots. Pivots is almost like you're doing it blindly, right? You can draw the clusters by yourself instead of using indicator to draw it. Happens, and it comes down and closes like this. You can see the pull. It pulls it to the line. Once it gets to the line, that magnetic effect is lost. There's no magnetic field anymore. So what happens? The market now starts to, go on its own. And then the next one now starts to pull it. Once there is a close, a valid close, it starts to go to the next one. That's the way it works. If there's a valid close, it starts to go to the next one. That's what you have to observe. Once there is a rejection, if it tries to go down, it fails. The one above will start to pull it. You can see that's what happened here. We put one more line here because there's obviously a resistance point here. You can see bounce, bounce, strong break, strong break, strong break, bounce, strong break, bounce. Now what traders look for is going forward. When I see a break like this, with a follow through like this, traders are saying that, okay, the right thing is for the market to get to the next line, right? So they look, you see, immediately it gets to that line, it's rejected again, Abi. It comes back down here, and then there's no follow through, Abi. It doesn't quite go, and then it goes back to this line, and now it's heading for the next line. Is it not? The next one around here. And then it gets there, it reverses. Comes back, it doesn't close, it's going back to that line. Are you seeing it now? So what you're looking out for is the rejections or the close. That's why the close of a bar is very important. That's why the close of a bar.
At the end of the day?
Yes.
At the end of the day?
Yes. The close at the end of the day is important. The close is important because if there's rejection, it means that the market's afraid of that price. It's a simple thing. It means that there are others that are sitting there that are preventing. Go to the lower time frame, look at other lines too. and see how the market is either accepting it or rejecting it. It's that simple. It's simple. Then going forward, all you just need to do is to put in your minor resistance and support level and then trade if you are trading with the trend.
Sir,
Okay.
when placing a trade now with this support and resistance,
No, we have not gotten to where you can place a trade yet. Yeah, when we get there now, we'll talk about it. So, see, just observe what I'm going to do now. This is the daily time frame, right? So what I'm going to do is very simple. I'm going to now look at my chart.
This second, what's the explanation?
No, I was trying to explain something. I will get there.
Okay.
Yeah, I will get there because he mentioned something that made me talk about it. We're supposed to look at chart patterns.
Okay.
Yes, we'll look at chart patterns. I hope we can get there today. So, but let's look at what I have here. Now, I'm reading this chart for support and resistance so that I can know where to keep my red lines and then keep them. This is the daily time frame, by the way. So I'm going to keep them and then I should be able to use it to determine where price is going to. So, of course, this is the obvious very first place. Abi, break, bounce, bounce, bounce. That's an obvious support level. Okay. I'll take another one. From here, I'm looking. There seems to be something around here. Right? So I'll keep it there. Abi? There's rejection here, break, rejection, rejection. You can see that. Strong break, fake breakout. Abi? Yes. Strong break, rejection, break. That's the next level. Okay. So we continue like that. So you can see how I'm doing it from this place now, looking for the next level. So as my line is there, I'm looking at how many times it touched. Yeah, because I'm placing this price. Remember I put 100, 150, 250, 200. So that's what I'm trying to do now. And I have to make it as effective as possible. So that, yeah. So you can see this place looks good. You can see the market drive from here to here, bounce, drive here, bounce, breaks out strongly, bounce there, comes back, and then it comes here ultimately, bounce from here, breaks out, and then retests there, and then goes. That's its valid level, is it not? Are you seeing what I'm doing now?
Yes.
Mm-hmm. So we start again. From here now, the next important level looks like here. I have about, in fact, is right here.
Yeah.
Is it not? Right here. Right here. So I have this.
Multiple rejection.
Yeah, multiple rejection. Breakout also. That's a valid place. If this market gets back into this zone, all these places will now serve as a level for me to observe daily close and rejection. Do you understand now? That's how it's traded. So even if you want to use other time frames, you can actually. You can use other time frames, but just make sure you maintain the same concept. This is another level, is it not? Yeah. Right here. It meets the condition of bounce, break, and retest. Yes, that's another level. Going up, this one has not met everything. I just have breakout and one bounce. So we continue to go until we get to somewhere around here.
So those three conditions must be present.
3 conditions.
Yes.
For major,
Yes.
if it's minor, I can say this is minor, right? But it's not major. For major, it mustn't be 3 conditions. It's any of the 3.
Okay.
Multiple rejection at a particular level. Here, I have multiple rejection. Is it not? I have multiple rejection here. Rejection, rejection. That's why I'm taking this place. And then, luckily, I have a breakout going backwards. Then here, I have bounce, break, bounce. 2. At least 2 bounce. Here, I have a breakout. I have a breakout here and 1 bounce, but not 2 bounce. Is it not? If I do this now, I will start drawing lines that are not effective. Yes, they are not effective. Not necessarily too many, but that are not effective. Yes. So the important thing is to draw effective ones. Then we continue from here. we're going up gradually and looking for areas where the market likely reacted from. We have one here.
Yeah.
You know, yes, we have 2 bounce and a breakout. So you can see what we're saying. Now the market leaves this level, and you can see what we are saying. When the market breaks out like this, it's going to head for the next level. Let's see where this market is going to. So from this point, nothing here until somewhere around here. Is it not?
Yeah.
That's the next place. This is the next place. So we have bounce here, we have breakout, we have failed breakouts. So this is bounce, this is bounce,